Okay, everyone can hear me, right? Before we go. Perfect. Good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. It is Friday, March the 8th. And happy International Women's Day to the three lovely ladies who are joining me this morning on the podcast. And a happy International Women's Day, of course, to all those women around the world. I hope we saw some of our bulletin news headlines this morning. The last one on the list is saying that we need more female leaders in this world. So perhaps we'll make more progress towards that and hopefully a more peaceful world with that. But I'd like to welcome joining me today, Noor Azleen Ahmad, editor of Crude Oil at Argus Media, Laurie Haitayan, Media Director for the Natural Resource Governance Institute, and Michelle Weiss-Bockman, Principal Analyst at Lloyd's List Intelligence. Thanks so much, ladies, for joining us today. Lots to talk about. Michelle, if I could start with you this morning and talk a bit about what's happening on the shipping markets from an insurance cost point of view. We haven't had you on the show, I believe, since we've seen more and more sort of diversions from the Red Sea area, Gulf of Aden, skirmishes and attacks there on a few vessels. So give us your outlook really for the second quarter as far as freight and shipping goes.
Thank you very much, and happy International Women's Day to everybody out there. Well, there's really been a game changer in the Red Sea in the last couple of days, and that's because we've seen our first fatality. An anti-ship ballistic missile hit a bulk carrier called the True Confidence. 3 crew members were killed, 4 critically injured, and that comes on top of the sinking of another vessel a couple of weeks ago. Now, it's too early to say what sort of impact that's going to have to say, but naturally there will be a recalibration and a rethink of risk. Now, at the moment, and I'm just looking directly at statistics here, we have seen a 43% drop in product tanker traffic through the Strait of Bab el-Mandeb compared to average levels since November, and we've seen a 33% drop in crude tanker traffic. So clearly, most of that is the result of northbound traffic of refined product and crude heading to Europe. Most of the Russian Asia-bound traffic has continued more or less uninterrupted, except for those that are taken on tankers that are Greek-owned. So the risk appetite is seen greatest for those with some sort of Asian ownership or involvement in the cargo, whereas you're seeing anybody with exposure or perceived exposure to the US, to Europe, or the UK, they are largely avoiding the route. We've just had a tweet from the US Central Command. They have destroyed more drones and anti-ship ballistic missiles that were fired by the Houthis earlier today. So it's really, who knows? I don't think anybody can confidently predict anything for the second quarter, given the levels of volatility. The only thing I can say is that the oil markets tend to shrug off so far this sort of volatility, and that's largely because there is that diversion, but there are extra costs associated with those diversions. And, really the next week is going to be critical. I think we're going to see further diversions, and those figures that I've explained to you earlier, they're going to see further reductions going through the Gulf of Aden, through to the Red Sea and the Suez Canal.
Thanks very much, Michelle. Nora, if I can go to you and just ask you on the crude markets, as Michelle just outlined, there are flows are still happening, but of course diversions, longer routes, costs on that front. Any concern creeping into the oil markets? Yet we don't really see that on the price, do we? Reflected in the price.
Yeah,
Still seems pretty calm.
I know. I mean, the thing is that on the crude oil side, it is actually quite surprising that the prices have not gone higher than where they are. And even our own consulting team, they're predicting that actually ICE Brent, expecting it to be hovering around the $84. I think that right now, the fact, as Michelle said, the fact that the ships are still, there hasn't been an actual disruption. It is diverting. And I think that there is that less of a concern. But I do feel there's a lot more upside than downside. There is a potential for prices to go higher just because now it's just gotten more expensive for cargoes to reach the end user country. So I think that there's possibility of the prices inching higher. But right now, I think the demand is still a bit uncertain. And until there are actual supply disruptions, I think the oil markets are rather calm. But I think that there is that vulnerability, I would say, to an upside in oil prices rather than downside, the way things are going.
Okay, thanks, Noor. Laurie, good morning. Again, let's get your take on your outlook, if you like, for things escalating, from the Israel-Gaza thing, obviously the Houthi activity around the Gulf of Aden. We've got through the last 2-3 months of this Red Sea activity relatively unscathed. What's the outlook for the next 3 months? I mean, is it more of the same in your opinion? And what's on the line there?
So I think now we're at a very important moment because everyone is looking at the ceasefire negotiations that are happening in Egypt. And as you know, everyone had put a deadline of the start of Ramadan. So Ramadan is starting a couple of days ago, like on Sunday or on Monday. And it looks like there are no good results or good outlook for the negotiations in Egypt. So that means, or the prediction is, or it has been, and maybe it is to put pressure to get a deal the soonest, it's like if there is no ceasefire by Ramadan, that will escalate things inside the Gaza, inside the West Bank, in Jerusalem, and therefore it could escalate on the other fronts, on the Lebanese front and on the Houthi front. So on the Houthi front, what does that mean? What kind of attacks will they do as part of their escalation because of the situation in Gaza? This is what we would want to see. And we hope that it is not going to be like direct attacks on tankers that are carrying diesel, oil, gas, all of that, because it's not because only for the price, but for the environmental impact as well and the harm. So it will be like a double bill to be paying, not only on the prices, but as well on health and environment. So I think that is what the expectation is, like there might be escalation in unless last minute there is a ceasefire on between Israel and Hamas, and therefore expecting maybe a ceasefire on the Lebanese and Israeli side. Therefore, the Houthis, I think, will be on alert as well. So let's see. So all it depends on what will happen in Egypt.
Yeah, I mean, just on that Lebanese border with Israel, talks, which are apparently talks happening in parallel with obviously trying to get a ceasefire. It's obviously all related and correlated. But what do you think? What's the sort of likelihood there of something coming also to? I mean, is that just something that's going to go on for the next few weeks? Lebanon and Israel trying to sort of sort out this buffer zone between them, or is it directly related today to how likely it is we'll see a ceasefire next door in Gaza or in Israel?
So I think everyone now in Beirut is talking about this 15 March deadline again. That had been, it seems, given by the Israelis if there is no solution. But Hezbollah had been very consistent, saying that if there is no ceasefire or an end to violence in Gaza, we're not going to discuss any details of a deal. But 2 points on this issue as well. So first of all, like it is very, it's for me, it's very absurd to talk about like a 6 weeks ceasefire. It's like ceasefire should mean an end to violence at all, and not like just putting on hold people's lives for 6 weeks or 6 whatever, and say like, but after that we'll continue aggression. And definitely, if this is the case where we're heading for Lebanon, what does that mean? Another 6 weeks of break, or it means that within the 6 weeks, Lebanon and Israel will go into a kind of a permanent ceasefire? That's not clear, and I don't think that Hezbollah is in that sense, like this is what they want, like to make a deal within the 6 weeks that will break and delink the unified front. So that's why, as long as the aggressions are continuing on Gaza front, the aggression will continue on the Lebanon-Israel front. And that's why this time Amos Hochstein's role and or like whatever he has in his hands are not much because of this ongoing war, and because no one is able like really put sense in the heads of the Israelis to end the violence. So we're talking about a temporary ceasefire, which is like, I don't think it could lead to any good places.
Yeah, and certainly, and Hamas has certainly put forward a long list of conditions, haven't they, as well, on their side, which doesn't seem that the Israelis are willing to consider. Michelle, let's go back to you again, talk about shipping, but I'd like your opinion on what's happening with Russian, if you like, vessels and shipping. These increased sanctions that the US is planning to place and increase on Russia, but this time specifically also adding to the shipping, the insurance again, sanctioned vessels, etc. What's happening with that flow, and is it still essentially uninterrupted?
Well, yes, the flow is uninterrupted, but what we're seeing is that a greater proportion of crude and refined products are being shipped on what we call the dark fleet. They're anonymous elderly vessels that operate outside Western sanctions. And that's because the Greek ship owners that until the implementation of sanctions nearly 14 months ago had about 50% of market share. Since OFAC, the US regulator, and the UK off-sea regulator have targeted ship owners, registered owners, and some ship managers, they have decided they do not want to be, stuck with an unsold cargo, because you've seen with the direct sanctioning of one of the dark fleet operators, Hennessy Holdings Limited, 19 of their ships cannot trade. They've lost their flag, they've lost their insurance, which was with Ingerstruck, the Russian insurance. Even Ingerstruck has pulled insurance. And so as a result, you're seeing more flows operating outside Western jurisdiction. Now, what Western regulators are hoping is that they can operate a pincer movement that will force more cargoes to come back within the price cap. And once again, this is a pivotal moment because we have Urals trading at, I think, around about $71 a barrel, which is $11 a barrel above that $60 a barrel price cap. But the discount of Russian grades to Brent is deepening with more sanctions. So that also means that there's more buying interest from China, which typically will go for the cheapest crude and has been quite opportunistic in its dealings with Russia. So I would say that it's a wait and see. We're seeing maybe some Russian Sovcomflot, that's the Russian government-owned tanker companies. Some of their vessels have also been directly sanctioned. And I'm following those cargoes now to see whether or not they're stranded, what happens to those vessels, because that pincer movement could start limiting the numbers of available tankers that are there in the market. Like the Red Sea situation, so much geopolitical uncertainty that could go either way with the oil markets.
Thanks, Michelle. Okay, Noor, I mean, on that point of one of the points of crude going to China, Russian crude, the discounts actually were getting less attractive at one point, but now it seems that they're becoming more attractive again for buyers like China, one of the buyers of Russian sanctioned crude, or maybe not sanctioned, but some of the Russian crude that's going in that direction. Give us your take on Chinese appetite as it ends the first quarter, taking into account the economic plan that's been highlighted early this week by the leadership there, and the outlook for the economy, and how comfortable it is with these crude prices and perhaps stocking up as a result.
Well, with the China demand, I mean, we've all known about the issues with the property sector, but the oil demand in China, as you know, is actually still quite decent. I mean, the August expectations of oil demand for China is about 600 to 700,000 barrels per day growth in 2024, which is, it's still quite decent, right? And the IEA and OPEC also have similar. So it's still a little bit to sell that in the economy China right now, where it's still a little bit sedate. So it's tough. But we do think that a lot of the demand is coming from the petrochemical producer sector. So they do need to ramp up their crude runs because they need a naphtha for the petrochemical sector. And that's when the crude import need is. In terms of the buying from China, what we saw was that the Russian crude prices into China did become, I would say, less cheap. It's not expensive, but less cheap. But it was also because of the whole OPEC plus production cuts. And that indirectly helped Russia because the whole medium sour complex was very strong. So it did give Russia that I guess, a boost in prices. But we do still see China as the huge importer of Russia. Also, on the India side, I think that in the last couple of months, particularly in December and January, with the increased scrutiny on the price cap by the US and EU on the price cap, on the dark fleet, I think that had some negative impact on India demand of Russian crude because they did have some slight issues in payment. And we saw that the volumes of this Russian crude, so-called, it did fall into India. So there is some impact more on India, which probably would make it easier for China to secure more Russian crude. But we don't see any, reduction in appetite for China's demand for crude, especially because Atlantic Basin cargoes are becoming a lot more expensive right now because of the
And what about Chinese and Indian demand for Saudi crude, for example? In terms of the Russian volumes that are going, they're up and down. Is that stable? Or is it being impacted?
Yes, it is. The interesting thing is that I think that the Middle East crude, particularly Saudi crude, because it's gotten a lot more expensive for cargoes from the Atlantic Basin, like possibly West Africa, North Sea coming into China, we've seen that the Chinese refiners have turned more to the Middle East suppliers, particularly Saudi. So there has been a tick up because the shorter route is just making it a little bit more expensive, better to move the Middle East crude into China. So we've seen a bit of a shift. At the end of the day, it may not. We'll see how it goes. But right now, they have turned more to the Middle East crude just because it's taken a lot longer for the West African and North Sea cargoes to come into China, and those have become more expensive compared to Middle East supplies.
Thanks, Noor. Laurie, sticking to crude, let's talk a little bit about Iran and Iranian crude movements. Some would go to China and some elsewhere. And we have a headline as well today, a bulletin news headline about the IAEA, Iranian uranium negotiations with the US. We haven't heard about that in a long time. And it's obviously ongoing in the background all the time, but isn't really making headlines. But is that going to have a reawakening, do you think? Or are we going to see those talks perhaps resume this year? Or they're too small a priority in the greater scheme of things?
Look, I think the Iranian position since the start of the war, since the start of 7 October, was to look beyond 7 October to what will come as a political process and how Iran will benefit from it. And all the de-escalation signs that we had seen, maybe it's not de-escalation, but not de-escalation that everyone was thinking might happen, that like all the allies and the proxies of Iran will join the war against the ultimate war against Israel. It didn't happen. And if it didn't happen in this case, it means it will not happen.
Yeah.
And that is what we were saying from the beginning, very calculated escalations or attacks from the proxies of Iran to serve the ultimate Iranian cause, which is like to bring back Iran to being a productive economy. Because if Iran is a productive economy, then all the proxies will get the benefit of it if they have been aligned with Iran's policies and they're strengthening their internal positions in their countries. So, like, to make it very easy, if Iran makes it at the end on the table with the Americans and with the Saudis and with the Chinese and the rest to have a say on what comes next in Israel, between Israel and Palestine, which is a Palestinian statehood, whatever that statehood would like, then there will be a lot of benefit for Iran. And if Iran benefits from that, it will be like a lot of benefit for Hezbollah with the with the money that will flow and all of that. So this is how they see. They see it as their first interest to be released from all these sanctions, or to some extent with most of these sanctions, to relieve their economy, and then that would help their proxies. So this has been the very constant politics and policy of the Iranians. The Americans are playing on board with that, because when the proxies attack, America knows who's behind them, but they don't attack the source. They go and attack the proxies. What happened in Jordan was very clear. Like, we knew like what kind of an attack was that, but the Americans chose to attack the Iraqi forces in Iraq and not go after the source. So as long as no one is going after the source, as long as the source is very calculated, this is what we are going to get, what we're seeing within the past 6 months. So that's the ultimate goal of Iran. A victory for Iran will be like to really move a lot of the sanctions, because Iran was very calculated vis-a-vis what is happening between Israel and Hamas.
Yeah, and it certainly needs that for its economy. There's the question for today. We're seeing record highs for gold, which is usually a risk off. It is a risk off instrument, and Bitcoin, generally speaking, risk on at the same time. And this is odd, because they usually move in opposite directions. So which do you believe reflects future market directions? They usually move in opposite directions. So how are we to interpret what's happening here? Bitcoin risk on or gold risk off? Is that the direction of the future, from these, Bitcoin or gold? I'm going to cast my vote there. Of course, the markets are proving very difficult to interpret these days, and not just on Bitcoin and gold. Michelle, back to you. I mean, talking about markets and interest rates and costs, indications from the US Fed that, we are going to maybe see some rate cuts later this year, but nothing too significant. So we're in this sort of higher for longer, 4 to 5%, let's say. How is that impacting shipping, insurance, costs, and planning, if at all?
Well, shipping is in a very fortunate position where freight is a very low part of the overall delivered cost of any of the commodities. So the biggest impact on freight cost is just pure supply and demand. And unfortunately, fortunately for ship owners, the unfortunate events, geopolitical volatility, the Red Sea, the events in Russia, the recalibration of oil markets, that's all been extremely positive for the owners of tankers. And so freight rates have been really, really healthy, even though typically, for example, with the OPEC plus production cuts, which sees, fewer demand for very large crude carriers coming out of the Middle East, heading to Asia, that typically, if you stripped all the geopolitics out, the freight market should be in a very, very different space where they are today. But what's happening is these geopolitical events and the current economy has been a positive, despite the negatives in what that we see for the world.
What about container rates? I mean, in terms of from a non-oil trade, let's say China exports, etc., U.S. economy, indications there of demand from Asian products. What are we seeing there?
Well, with container rates, we saw an initial spike, for example, on the back of Red Sea diversions, which most of the Asia-bound commodity freight boxes to Europe and America are going around the Cape. But that initial blip has come back, and that's because container freight rates are sort of, far less positive than we see with tanker rates, because we are seeing a lot of pressure on consumer demand going into America. But I would caution that we can't really read too much into freight rates for containers, because there are also other factors like the capacity. There's a looming overcapacity of container ships, because so many were ordered when freight spiked during the pandemic. So you have to strip that out when you look at those factors out when you're looking directly at trying to correlate economic conditions to the container freight rates that we see currently in the market.
Yeah, we still have COVID overhang on many fronts there. Okay, well, there's our result, 56.44, Bitcoin risk on winning that particular question. We'll see. That's interesting. Nora, back to you. Let's talk a bit about non-OPEC oil. U.S. production, which was on the rise obviously last year and has hit a certain point by the end of the year, surprising supposedly a lot of people in the market. Continued growth expected this year, but would you agree with the majority to say that that's going to sort of plateau or not be as strong as last year? And is that a concern for OPEC?
Yeah, I think that with the U.S. shale, I think the one thing is that there is the potential for the U.S. shale growth to surprise them to the upside as it did in 2023. Although, there's still capital discipline, but I think there is that concern. Also, I think our view is that should the possibility that Donald Trump wins a November election, that could also lead to a boost in U.S. shale. So I think right now the expectations is that it's going to be fairly steady, but there is the prospect of it rising more than all the analysts is expecting. So that I think is the one thing that is going to keep a lid on oil prices. That's what we feel. We do think that OPEC Plus will need to extend its output cuts to keep the market balanced. And I think that's why we're still seeing that mid-80s level for Brent. But I think that US shale is going to be something that the market is going to look at closely, just to see whether it produces production will be more than what all of us are predicting this year.
Yeah, thanks, Noor. Laurie, I mean, on that front of OPEC and quotas, obviously they've just announced last week that they're going to be extending the cuts to June, which is not surprising. A lot of people saying they're going to have to go beyond that date. But the other thing in June that's going to happen is they're going to meet again and talk about quotas going forward, more of a medium, long-term outlook. Are they going to be in the same dilemma that they were in November, December when they last met? What's changed? Give us an update also on the Iraqi production, Libyan production that's kind of been having stops and starts really for the last few years on and off. And how is OPEC going to deal with that compliance issue as well?
Look, they're all racing. Like OPEC Plus is racing with time and with energy transition. That's their biggest enemy. No one else. It's what's happening. All the policies that might lead to that plateauing of demand, or even like an accelerated decrease in demand after that plateauing. So look, Iraq, they are complying as much as they can because they want to stay in good terms, but at the same time they understand that they don't have much time, but they don't at the same time, it's not that they're not doing the same as what, let's say, Saudi Arabia is doing, diversifying their economy. You don't see that the Iraqi money that is coming from oil and gas or any kind of production or any kind of increase is put in a plan that is to end up not relying on oil. And just like putting more effort on gas or on decarbonization or that, but you don't see that there is really a plan, and that is scary. If you want to talk about Libya, uncertainties, geopolitical uncertainties, security-wise, this is their biggest enemy as well. Every couple of months we hear about pause in production because of some certain militias or some certain factions coming in, stopping because they want certain things in return. So as long as there is this unstable situation, Libya will be very difficult in really attracting money or developing it. But again, all of these are the enemies of today, but the real enemy of OPEC is this energy transition that is a reality. It's not going to go away. So I think this is going to be things that they will deal with when they come back, and definitely having a production coming from elsewhere. So, and keep on coming. Yes, we hear today there are some arbitration between the American companies in Guyana Does that mean that the Guyana production will not increase? Venezuela, what will happen to Venezuela after the elections? All of that, yes, but definitely policy-wise, the energy transition is more scary to them than all of that.
Yeah, but also policy-wise, you're seeing both in the US and in Europe and amongst, super majors, oil majors, a slight, everyone is accepting the energy transition and countries are investing in it. But there is a bit of retraction from those commitments on the oil majors front this year. Shell made a few statements, BP, all of them are sort of beginning to retract and take the OPEC view of we need to keep producing while we can and while it's needed. But ladies, thank you so much for joining us on this International Women's Day. Thank you to Michelle, Laurie, and Noor. Wishing you a great weekend ahead and look forward to seeing you very soon again. Thank you so much.
Thank you. I like the poster. Thank you.
Thank you.
Bye-bye.
Bye.
Bye-bye.
Thank you, everyone.